So we have a question here that is special because we are given a bank statement and a cash book to review. And one of the first things we notice is that the opening balance on our bank statement and from our cash book, they differ. So we have 2718 reflected as the opening balance from the bank statement and $354 on the credit side of the cash book. So whenever this occurs, we have to do something called an open reconciliation because we have to make sure that the beginning balance in our cash book matches the beginning balance from our bank statement. All right. This question also includes some errors which we will go through. And as we work through the questions, if we ourselves make errors, or if I make errors as I go through this, we will work through how to find them and make the necessary corrections. The most, I guess, time consuming part of this question would be checking off the information on our bank statement against what is in our cash book. But once we've got all the information we need for our opening reconciliation, to update our cash book and to complete our bank reconciliation, it will go pretty quickly after that. So let's get started. We'll scroll down the page a bit to see what other information that we have besides the bank statement, the cash book, and see what is required of us. So it says here, we have some notes. It says, after investigation, the accounting clerk found the following discrepancies. The first one is the payment towards the vehicle loan, check 454, was correctly recorded in the bank statement. So we know when we review and we come across that transaction in the bank statement, it's correct there. So if it is incorrect anywhere else in the cash book, we will have to make adjustments for that. Secondly, the payment to Estrurant, check 455, was incorrectly treated as a receipt in the cash book. So here we have a check which was in the cash book on the receipt side. So that is an error which we will have to make an adjustment for. So as you work through these type of questions, you can always make your notes, your additional notes, so that you are prepared for what you have to do when you reach that point. Now, the requireds are asking us to create that opening reconciliation as at October 1st, 2022. And then after that, we have to complete the updated cash book for Seabird. Finally, a bank reconciliation statement as at the 31st of October 2022. So just pay close attention to the dates, especially for the reports that we have to prepare, because those are important when we start to put together our solution. So what we're going to do is, as we go through the bank statement and check off the information against what's in our cash book, we are going to highlight any transactions we come across that may be for our open reconciliation. We're going to cross off any transactions that we find that we see on our bank statement that is also in our cash book. And we're going to circle any transactions that we find in our bank statement that is not in our cash book. Then we can clearly identify what information we have and where it's supposed to go in one of those three parts. All right, so let's get started. So I'm going to put an X just here. You don't need to do this, but I like to just know where all my errors are. So when I come across the errors, I'm just going to put an X next to them so that I know that I need to go and do some type of adjustment there. So it says on October 1, we have cash sales deposit for $4,390. So this is on our bank statement on the credit side. So let's check our cash book for that amount. We do not see that amount anywhere in our cash book, and we don't see any numbers totaling that amount either. So for that reason, we can assume that this is an amount that should be included in our opening reconciliation, right? So usually anytime you come across a deposit on your bank statement, that is not in the reflected in the current cash book that you are for the month that you're reviewing, it's more than likely a unrecorded deposit from the prior month. So if the balance is incorrect as it is here on the cash book, we would include that in our calculation for the opening reconciliation. All right. So moving on to the second of the month, we have check 451 for 1450. Now, uh, in this question, we have check numbers. Okay. And this makes it easy for us to identify what expenses could possibly be included in our calculation again for our opening rec. So if you look at your cash book, you have these check numbers here. So the oldest check number in the cash book that you're currently working on, if you find any checks on your bank statement that is older than that, those have to be included in your opening rec. So our oldest check number is 453 in this case, and we have check 451. So we can highlight this because this should be included in the calculation of our opening reconciliation. On to the third, we have a deposit for 2754 on the credit side of our bank statement. Let's check our cash book for this amount. Now, we do not see this amount as in 2754, but if you look closely, you will see that there are two income transactions that total 2754. Now, you must remember that there will be cases where you collect money from customers and you don't deposit that money immediately. You could deposit the money the same day, or you could deposit it days or weeks later. So you have to look for merged deposits first before you make any assumptions. That is what we did when we were looking for the 4319. We saw no combination, which is why we could assume that it was for part of the opening reconciliation. But in this case, we do have these two deposits in the cash book that do total that, so we can cross those off. Oops. We can cross off the 1254 and the 1500 from our cash book because we found that amount. On to the next one, which is cash sale deposit for 8500 in our bank statement. That is in our cash book, so let's cross it off from both reports. Here's that vehicle loan that was in our notes. The vehicle loan on the bank statement is 7100, and the note did say that it is correct on the bank statement. So let's see what it looks like in the cash book. So in the cash book, it is 1700. So it looks like these 1 and 7 were transposed. So we just put an X next to that so that we know we have to correct that. Good. We can cross this off because we're going to make a correction here. Check 456, 1560. We see that in our cash book, so we can cross those two off. We have a standing order on the 15th for $1,000. Is that in our cash book? On the credit side, no, we don't see that on the credit side, so we can cross that off. Sorry, we're not crossing that off, we're circling that because this needs to be included in our updated cash book. Check 457 for 780. Is that in our cash book? It is right here, so let's cross those off. Check 458 for 974. We have that in the cash book. A debit transfer for $825. We don't see that on the credit side of our cash book, so we can circle this because we need to include that in our calculation for the updated cash book. And we have check 459 for 1200. That is in our cash book right here. Check 460 for $56. Yes, we do have that in the cash book. Rent 461 for 23. See that there in our cash book. Check 452 for 576. So this check cleared a little later in the month, but if you look at the check number again, it's 452. So we can highlight this one because it is before our oldest check, which is 453. So it has to be included in our opening reconciliation calculation. On the 29th, we have a credit transfer for 4,000. That is not on the debit side of our cash book. So we will circle that. Right. Bank charges for 210. That is not in our cash book on the credit side. So we will circle that. And we also don't see that dividend for 1040. All right. So we can circle that. Good. Now that we've checked off everything on our bank statement against what is in our cash book, we can move on to the next step, which is preparing our reports. So be sure to tune into the next video to see how we go about using this information to